Types of journal entries. Now there are various types of journal entries also. There is opening, there is transfer entry, there is closing entry, there is adjusting entry, there is compound entries, there is reversing entries, right? So we will see what kind of entries we have. Opening entries, it's very simple. The entries which we have to do initially when the financial transactions are being recorded. These are the initial entries that establish the opening balances in the various ledger accounts. See, we know that the company is the going concern, right? We will record transactions over and over again. Whenever one financial year gets over, we have a new financial year to start with. So on 31st March 2025, this year, we will be having certain closing balances that will be the opening balances for the next year, that is 1st April 2025 to 31st March 2026, right? So we will be having closing balances, maybe of cash, maybe of stock, maybe of some other inventory, right? That will have the opening balances in next financial year from 1st April 2025. So that will have those opening entries. These are the initial entries that establish the opening balances in various ledger accounts. Transfer entries facilitate the movement of amounts from one account to another, ensuring each transaction impacts the financial statements appropriately, right? So transfer entries is like this thing. Whenever I'm bringing cash to the company as capital, two accounts are being affected. Capital account is being credited, cash account is being debited. Cash, again, it's an asset increasing, so it will be debited, right? Capital is a liability, right? It will be credited. Then closing entries. Closing entries will be done on 31st March 2025, made at the end of accounting period to transfer the balances from the temporary accounts to the permanent accounts, right? Adjusting entries made before preparing the financial statements. Adjusting entries account for items that are not recorded in the accounting system at the period end. So there are certain entries which need to be adjusted, like made before preparing the financial statements. These are the entries which require certain adjustment, but they are not actually recorded in the financial statement. But we'll just learn about it. Compound entries, like when we have more, we are just clubbing 2 or 3 entries together. It involves more than 2 accounts where there are multiple debits, multiple credits, or both. So the entry which we just saw, this was a compounding entry. We are having 3 accounts to be involved here: cash, assets, and capital. Reversing entries made at the beginning of the new accounting period. Reversing entries negate specific adjusting entries made in the previous period, right? So any entry that is just negating the entry which is done in the previous period, that is called reversing of entry, right? We are just reversing it. That entry is called reversing. It will be made in the beginning of the accounting period. It will be reversing the entry. It's basically reversing entries negating the specific adjusting entries made in the previous period. So whatever entries made in the previous period, to negate the effect of that, we will be making the reversing entry, right?